Hey, what's up, folks? This is Dan French, Wealthytainment. You guys know the channel. Like and subscribe. Thank you for tuning in and making me part of your day. You guys know what this channel is about. It's about how-tos, motivation, mindset. Also, we talk about a lot of current events, and I'm going to talk about one today that's very interesting to me about getting into a house or buying a house today and the affordability and how that's declined. You know, you look at these housing issues that we're seeing and the prices of homes going up, rates 7% and climbing. I look at it and say, you know, what is the average cost to get into a home, or what can you qualify if you need a loan? What is the average income needed to qualify to get into a home? So let's get right into this. I have an interview that I want you guys to listen to. I'm going to come back and give you my opinion on what's going on and what's going to happen here in the future, and then let you know what I think the landscape's going to look like for home buyers out there.
What salary is needed to buy a home to afford a middle-class life today?
Well, if we look at the average home in America, it's sitting around $400,000, and at a 7% interest rate, you would need to make $100,000 with zero debt, no car payment, no student loans, no credit cards, to have a shot at qualifying. If you do have a car payment, student loans, and credit card debt, which most Americans have, you're going to need more, about $120,000 to $130,000 for a $400,000 home. So for the average American right now, statistically can only afford about a $250,000 home, and there's only a few places in America that still offer homes at that price.
So what's happening at the moment is parents who have some money are helping their children, and that's the only way those children can get into a home of their own. Is that accurate?
That is accurate if they're helping with the down payment, but if the child doesn't have the $100,000 or $120,000 salary to back it up, parents will not only have to help with down payment, but also co-sign if the child doesn't make over $100,000 for most metropolitan cities.
And you don't see much change in the immediate future?
I don't. I would just tell any young person to get their ducks in a row financially, learn about what it takes to get a mortgage, and be prepared. So if interest rates do come down, you're ready to pounce, because you don't want to be late if the prices start shooting up. You want to be early to grab yourself a property.
So there you have it. Basically saying that right now it's just, unless you're making $100,000 plus, 2 household incomes, you're not going to be able to qualify or survive on a mortgage payment today, putting down the minimum amount, right? You look at the average price we've seen soar across the country, upwards of close to $400,000. In some cities, $450,000, $480,000. And why is this happening? Well, it's supply and demand. We all know that. Interest rates have gone up, so the Fed is not purchasing bonds to keep and suppress the rates down. And you look at the economic news, which really dictates what the needle is doing for rates. We see that the economy is still kind of chugging along. It's not doing great at all, but it's not doing bad either. It's just kind of going through its process. So rates right now are still 7%. Now, is this pushing out the American dream? You know, a lot of people out there think the American dream is now gone. Inflation is the problem, even though some people have sustained the storm of understanding that gas and things have gone up. Maybe they saved some money and were smart. Maybe they are making, you know, upwards of $200,000 a year, and so they're okay to survive. But I think a lot of people out there, the average American, thinking that they're going to come out and buy a, you know, standard 3-bedroom, 2-bath home in a decent location. You heard it, you know, nationally $250,000, which it's not saying it's a bad home depending on where you buy, but you're limited on your location. You're limited on what your resources are going to be. So I feel that the Americans out there that are trying to buy a house, good luck, because at the end of the day, unless rates come down, unless things change, I don't see anybody buying a house, or at least the clip that we saw. You know, we saw markets, you know, definitely different over the last few years. We saw things where we had the market collapse. We also saw things where COVID happened and there was a frenzy of supply and demand, which really pushed those prices up quite a bit. So when you look at where we're at today with inflation, you look at what is going on with the economy, you look at where interest rates are at, there is no motivation for anybody out there to leave the current house that they're in, if they did buy, and go find another house with a double amount of rate. Most people that have houses today, a lot of them, they have a low rate. They have, maybe a low 3%, 4% rate. I think if rates drop down to 4 to 5%, we would see a frenzy in the market. But this person that did this, they're completely right. You look at this right here, National Association of Realtors, over $100,000. Today, 20.3 million US households pay over half of their income on a place to live. That means nearly 1 in 6 families are denied the stability that safe, decent, and affordable housing provides. That's astonishing. Almost 70 cities cited higher mortgage rates, 56% lack affordability in homes, 53% share inability to compete with cash buyers, which is true. You come in with cash, there's more, you have more clout, you have more power, right? People want to take on cash because they don't want to deal with the financing part. So it really pushes those buyers out that are finance buyers, a lot of times competing with these cash buyers. It's not going to put and support and help them and support them in buying a home. Plus, if you have cash, you can negotiate down and bring those prices down. Now, also popular concessions, right? Sellers are now giving and offering 2 and 5 sellers offering credits for repairs. There's a lot of people out there that don't want to move into a house that needs work. They're already paying a premium. Why am I going to move into a house with a 7% rate and I got to do all the upgrades and I got to fix the house, and do all the repairs? Now, you go back 2 or 3 years when COVID was going on, people were just putting money out, no problem for that. You can see mortgage rates. Mortgage rates creeping right now, 6.94%. 15-year is 6.62%. So you could see what's going on here. And look at the Federal Reserve rate actions of inflation. You could see our inflation numbers in 1980s. We're obviously not that high, but we're definitely seeing a spike in inflation. And monthly affordability by Zillow is saying that 40%. You can see these numbers. These numbers are indicating what and how these Americans are out there spending their money. You go into these stores, especially in a lot of these cities, they're up double digits in inflation. They're up quite a bit, and people are now looking at different ways to save money. So again, is everybody impacted by this? Yes. Is everybody really kind of hesitant? I'm going to say for the most part. The only people that are not taking the stores and all this inflation numbers in consideration maybe is they're coming from a different region or state that has a higher income or a higher amount of homes that are listed, or average price of home is higher, and so they're selling their house, making a lot of money, and then coming to a place that's cheaper, and they're downsizing, or potentially they're just going to a cheaper place to live, pocketing some of that money and not putting themselves in a position where they're going to be mortgage broke, right? So this is all true. Everything that we're talking about is happening, and we've seen the numbers and we've seen the decline. I think it was some astounding number of home sales down, or home listings were down, I think 40 something percent. So everybody's feeling the pinch, and nobody knows really, a lot of people don't really know what they want to do. And so they're sitting on the sidelines until rates come down, until consumer confidence starts to creep up. We're going to continue to see these problems. And again, if inflation keeps going the way it is, another year or two, you're going to need to make $150,000 combined household income to survive and to support a mortgage payment. If you guys have any questions on this, what do you guys think? Do you guys think that inflation is going to keep this number going up? Is the American dream dead? Let me know. Dan French, Wealthytainment. Subscribe, like the channel. We'll see you guys at the next one, because I'm out of here.